Hey everyone, welcome back to the channel. Today we're diving deep into a comprehensive analysis of Realty Income Corporation, ticker symbol O, often referred to as the Monthly Dividend Company. If you're looking for a solid dividend stock with a focus on real estate, you're in the right place. Let's break down everything you need to know about Realty Income, from its business model to financials, valuation, and whether it's a buy for your portfolio. Stick around. And don't forget to hit that like button and subscribe for more in-depth stock analyses. All right, let's kick things off with a quick overview of what makes Realty Income stand out in the crowded REIT space. This isn't just any real estate investment trust. It's an S&P 500 company with a laser focus on delivering dependable monthly dividends to shareholders. With over 15,000 properties across the US, UK, and beyond, they've built a reputation for stability and consistency, even through tough economic cycles. Their tenant base spans over 1,700 clients across 90 industries, which gives them incredible diversification. So whether you're a dividend hunter or a long-term investor, Realty Income often pops up as a name to watch. Let's dig deeper into who they are and what drives their business. So, who exactly is Realty Income? Founded in 1969, this San Diego-based REIT specializes in freestanding, single-tenant commercial properties under long-term net lease agreements. Think retail spaces, industrial facilities, and even some gaming properties. Their tenants include big names across sectors like grocery, convenience stores, and dollar stores, businesses that tend to be recession-resistant. What's unique about Realty Income is their commitment to monthly dividends, a rare feature that's earned them a loyal following among income-focused investors. They're also part of the S&P 500 Dividend Aristocrats Index, meaning they've increased dividends for at least 25 consecutive years. Under the leadership of CEO Sumit Roy, they've grown their market cap to over $60 billion, with a portfolio that's nearly 99% occupied. That's a strong foundation, but let's see how their numbers stack up. Let's talk revenue and how Realty Income makes its money. In 2024, their full-year revenue came in at $5.27 billion, a solid increase from $4.8 billion in 2023. Breaking it down by segment, the bulk of their about $4.1 billion comes from retail properties. Industrial properties contributed another $795 million, while other non-reportable segments added $466 million. Geographically, the U.S. dominates with $3.37 billion of their revenue, followed by the U.K. at $508 million, and smaller contributions from other regions. This spread shows how well diversified they are, not just in property type, but also across markets. That high occupancy rate of 98.9% and a rent recapture rate of 103.9% further highlight their ability to maintain stable cash flows. It's clear their business model is built for consistency, but how are they performing on the earnings front? Moving on to earnings, Realty Income's latest results for Q4 2025 showed some impressive numbers. Their adjusted funds from operations, or FO, came in at $8 per share for the quarter, contributing to a full-year FO of $4.28 per share. That's a key metric for REITs, since it reflects the cash available for dividends. Revenue for the quarter grew by 11% year over year, and they closed out 2025 with a full-year net income of $1.06 billion, up from $860 million in 2024. What's driving this? A combination of portfolio expansion. They invested $2.4 billion in Q4 alone, and strong tenant retention. Their earnings paint a picture of a company that's not just surviving, but thriving, even in a high-interest rate environment. Let's see what else we can glean from their financials. Now, let's take a closer look at some insights from their Q4 2024 earnings call. Management highlighted a 4.8% growth in AFO, underscoring the strength of their portfolio. They emphasized the stability of their 98.9% occupancy rate and noted how their diversified tenant base, spanning retail, industrial, and more, continues to provide resilience. They also pointed out strategic acquisitions as a key growth driver, alongside a focus on maintaining high rent recapture rates. Looking ahead, they expressed optimism about their 2025 outlook, with plans to further expand their investment platform while keeping a close eye on tenant credit quality. It's clear they're prioritizing long-term stability, which is exactly what dividend investors want to hear. Let's dive into the nitty-gritty of Realty Income's financial statements. Starting with their income statement for 2025, they reported revenue of $5.75 billion, up from $27 billion in 2024, showing consistent top-line growth. Gross profit stood at $5.116 billion, and net income rose to $1.6 billion, translating to an EPS of $1.07. On the balance sheet, total assets as of 2025 were a massive $72.8 billion, with total liabilities at $32.7 billion and shareholders' equity at $39.4 billion. Their debt-to-equity ratio sits at 0.83, which is reasonable for a REIT given the capital-intensive nature of the business. Looking at key metrics, their dividend yield is a juicy 4.97%, and their free cash flow yield is around 6.37%, signaling strong cash generation. However, their current ratio of 0.51 suggests limited liquidity for short-term obligations, something to keep an eye on. Overall, the financials reflect a company with solid growth, but a leveraged balance sheet, pretty standard for REITs. Now let's tackle valuation. Realty Income is currently trading at $65 per share, with a trailing PE ratio of about 55.6, which is quite high compared to the retail industry average of 44.5. Their price-to-sales ratio is 10.54, also on the pricier side. Looking at forward PE estimates for 2026, analysts peg it at around 37.25, with a range between 36.8 and 37.71, suggesting the stock might be overvalued relative to future earnings growth. On the flip side, their enterprise value of $93 billion reflects the significant debt load tied to their asset base. Given the high dividend yield of nearly 5%, some investors might justify the premium for the consistent income stream. But purely on valuation metrics, it looks a bit stretched. Let's see how their strengths and weaknesses play into this. All right, time for a SWOT analysis to break down Realty Income's strengths, weaknesses, opportunities, and threats. Starting with strengths, their consistent financial performance stands out. 4.8% AFFO growth and a near 99% occupancy rate across thousands of properties is no small feat. Their diversified tenant base across 90 industries and long-term net leases provide a buffer against economic downturns. On the flip side, weaknesses include their high debt levels, with a debt-to-equity ratio of 0.83, which could pose risks if interest rates climb further. Opportunities? They've got plenty of room to expand internationally, especially in markets like the UK, and their focus on recession-resistant tenants positions them well for uncertain times. Threats include potential economic slowdowns impacting tenant credit quality, which could lead to vacancies or rent defaults. Rising interest rates are also a concern as they increase borrowing costs. Overall, Realty Income has a strong foundation, but there are risks to monitor. Let's take a look at Realty Income's recent performance on the charts. Over the past week, the stock is up 1.72%, and over the last month, it's gained 7.34%. Zooming out, the 3-month performance shows a solid 17.48% increase, while the 1-year return sits at 17.02%. Over 5 years, though, it's only up 9.98%, underperforming broader market indices like the S&P 500. Compared to the retail industry, which is up 4.32% over 1 year, Realty Income is doing better, but it lags behind the broader real estate sector's 5-year performance of minus 9.37%. Short-term, the stock seems to have momentum, with a 25% price gain recently noted by analysts. If you're considering a short-term move, keep an eye on resistance levels around $65. Breaking that could signal more upside. But for long-term investors, the dividend consistency might outweigh these price fluctuations.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.